Hi, I'm Andrew Kronenberg with Keller Williams of Central PA. Today's video, we're going to be discussing interest rates and how they impact you as a buyer or seller. Stay tuned for more details. Before we get into interest rates, let's just touch on the economy in general. So we've had a lot of growth over the last couple years, specific to unemployment rate decreases, general household spending has increased, and just steady growth across the board. Want to give you a little bit of a background on some lingo that professionals will use when they refer to interest rates or talk about the economy. So economists and lenders will sometimes use the term basis points. So 25 basis points or a quarter of a point really is the equivalent of 0.25%. So when somebody talks about the Fed meeting and the interest rate going up 25 basis points, the interest rate really went up 0.25%. So the Fed meets 4 times annually. This year so far there's been an increase when they met in March, an increase in June, and just recently at the end of September when the Fed met there was another increase in the interest rate. Now, albeit take this with a grain of salt, interest rates are still historically low. So we've been a little spoiled over the past several years with interest rates in the high 3s, low and mid 4%. Right now they're touching on 5%. In front of you right now, you have a really powerful graphic. So this illustration was provided to us by Jessica Regan with GMH Mortgage Services. What this does is it illustrates how the affordability of a home decreases with the increase in interest rates. It uses the example of a starting rate of 4% with a home loan of $200,000 and a principal and interest payment of $954. And then it shows incremental increases in mortgage rates and how your principal and interest payments increase with those rates. But if you wanted to maintain the same level of payment, how your home value in your shopping price point decreases. So this is really targeted at buyers to show them, hey, as interest rates go up, the price point for where I'm shopping and where my budget is for a payment, if I want that payment to stay the same, the affordability of the home or the price point of the home that I'll be shopping for decreases. So what does this mean overall for buyers and sellers? The good news is that there's been steady home appreciation. So for a seller, they should be seeing better equity growth over the last couple years. For buyers, it means that it's probably more important to consider a purchase sooner rather than later because interest rates are continued to forecast to go up. So that affordability will decrease if you wish for your payment to stay the same. If you have any questions about the interest rates, we encourage you to reach out to Jessica Regan, whose information can be found on the illustration that was provided to you earlier. If you have any questions about your unique position in buying or selling, we welcome those phone calls or emails. Again, Andrew Kronenberg with Keller Williams of Central PA. I appreciate you giving us the time today to watch the video. Take care.